Hey guys, welcome back to my trade journal series where I'm trading one system, one ticker, S&P 500 futures every single day for a full year. And I'm going to journal every session to track progress, reflect, and sharpen my execution. So if you're serious about building consistency and treating trading like a business, you're in the right place. Stick around, and at the end, I'll break down the key levels that I'm watching for tomorrow. Let's go. So yesterday's level was this. Worked out pretty good. We hit it today and bounced like I said we would. This was the other level. If we had broke under, it would be bearish. So for today, I made about $221. Actually ended up green, unlike the other days. So, and the reason I made sure today was green was because I had 2 day losing streak already, and this morning I decided I was gonna take more time. I decided to do a little yoga session this morning to clear my mind and kind of reset and make sure my mind and body was in the right focus. I didn't rush in, and I accepted that late start because I knew that the market would always offer a setup regardless of any time I get into in the day, right? So the market is always moving. There's always volatility. So as long as you're alive and you're able to trade, you'll get the money. So I just waited. I sat around, watched the market on the 5 minute, 10 minute time frame. And as you can see here, this is one of my entries where I made money on. I caught the first bounce of the day. And the reason I caught that bounce is because I was just patiently waiting and waiting. I was watching for the candlestick and the volume to slow down. And then as we get over here, which is the 10 minute MOB, you can see that big yellow line there. We started to form dojis, and I went in around that 63.55 area to 58 area. Went long, took it for 10 plus points, and went out and got my $200 profit. And I just called that a day. And then after that, it rejected on the 5 minute MOB area here, where we kind of tried to climb back up, couldn't get through, and eventually came down. So we'll walk through the rest of the signals that we saw today on our 1 minute chart as well and see how those play out. So, oh no, signals I don't want to copy and paste over. All right. So at 9:39, we had a structure bullish signal, which tells us that we want to buy the dip at the MOB. So we came down, tested the MOB right here. So if you bought here, made this push up, you're good. But at this point, we're seeing a lot of depth crosses going downwards, so which means a lot of moving averages converging to the downside. And eventually that led to more sell-off, and it eventually invalidated the bearish structure over here, despite the alert not showing up in the server about that. So then 11:20, we had a triple buy signal, which was around here. Um, and that is usually a very strong signal, very bullish when you get a triple buy signal, but that wasn't strong enough to push up. We ended up selling off a little bit because we rejected off that 1 minute moving average there, push down. So at this point, I had knew to start looking for buying opportunities, because if we got triple buy signal, that means market makers were ready to step in a little bit. And eventually, this is where my first trade went off. At 11:52, we had a buy signal around here. Started adding positions, and then we tested this bottom again, 63.55 area, like I said, and went long, and then exited around here, this area. So then 12:40 was the last signal of the day, and that was over here where we had a sell signal, and that led to the pressure selling off. And for most of the day, we just somewhat rejected this moving average here until over here eventually broke over, started using it as a support, and that's when we had the reversal of the day. So that was toward the end of the day. It was a very interesting day, and I think we somewhat dropped because of two things. We had tariff news last night where the president said that they were gonna announce 100% tariff on chips, and everybody was like, yo, that's got to be bearish, right? Fundamentally that is bearish, but the market decided to squeeze up here because market maker likes to do market maker things and scam. So it pushed up, and this morning it sold off because everybody woke up and they were super bullish, and they're like, oh, market can't possibly go down due to the tariff, it's so bullish. And then as all the other retail trader coming in, the market starts selling off and catching everybody with their pants down. So it was a very interesting day. Jobless claim data also came out as well, and showing that there were more people being laid off and claiming unemployment. But let's go over levels for tomorrow. So key levels to watch for tomorrow, since this worked out so well, these levels for today, I would say we're gonna keep the same levels for tomorrow. You know, especially these level working out. I think as long as we're above 6332, we remain bullish. If we get under that, we're in no man's zone. And then under 6315, we are confirmed bearish. That means we're going down. So we've been watching somewhat similar to this level for the last few days, and I think they're still extremely effective. And I would continue to watch them. I don't know if this is going to be the full reversal for the day. I don't know if this is just a clean reset. On the 48-minute time frame, it looks pretty nice. It looks pretty good. I'll show you why. So 48-minute time frame, we have broken over. We had this nice V-shaped recovery here, right? Broken over that 48-minute MOB, that line here. And then we back tested here, back tested twice, 3 times, pushed up higher, So now we've broken over this resistance, and we just came to back test liquidity, grab one more time. So if this is a bullish move, and we expect this to continue to be a bullish move, then this would just push up higher here, and then we'll probably back test this other moving average here as support at some point, like this, and continue to move up. But if we lose this area again, then bullish bias gets invalidated and goes bearish again. So that's how you should always be looking at the market on these levels to validate or invalidate your decision making process. If we lose this level, we're bearish. As long as we're above this level, we're bullish, and we'll continue to be bullish and buy the dip mode. So if you always train yourself in your mind like that, then there's no right or wrong. You're just playing the levels, and you're just letting the level dictate your decision making process. So I hope that helps. And if you'd like to see consistent trading built over time, subscribe, follow this journey, and let's grow together. Thank you for watching, and have a great day.